We talked about the volume and the range that it went through over the course of the session. Just going to look at the numbers. 537 on the downside, 600 on the upside. Put all that together. States Cunningham's with me. How did the market perform during what are exceptionally volatile times?
I would say trading was very, very volatile, but trading was very orderly, and that's really what is most important, that the markets move smoothly.
I mean, you know, your systems are well designed to cope with well over 1.4 billion shares, correct?
Yes, absolutely. Our systems were designed to cope well in all sorts of market conditions. And in fact, today's market volatility, while the numbers are really big, and you see 1,000-point swings, and that seems like a big market move, from a market percentage standpoint, it wasn't actually a significant move at all.
So as the Dow and the market indices, the S&P, have risen, so to use the phrase that we say on Questioning's business, 1,000 points isn't what it used to be. Because, you know, have you had to continually upgrade the systems to cope just with these larger numbers?
We're always upgrading our systems to maximize performance, but a day like today didn't put any strain at all.
And Stacey, looking at the underlying trends that you see in terms of, you know, for example, we've talked about the VIX index,
yes,
and the way in which that may have caused the spike yesterday. Do you know anything about the spike yesterday?
Well, I think the VIX, what we saw in the VIX was an increase in overall volatility, and so that's reflected in the market. I think what you see is that when there is a spike like that in the VIX, you see liquidity migrate back to the exchanges, back to the lit markets. It's a safe haven, and so you see that, and that's exactly what we saw over the past couple of days, a lot of liquidity coming back to the exchanges directly.
And do you see that again as between, say, the equities and the bond market, where we saw, I'm just looking again at your chart here, I mean, look, the 10-year, actually, the 10-year yield down 26 basis points, and the price up? Good.
Yeah, certainly in market events like this, you're looking at the correlation across all asset classes and seeing how the interplay works. And that's really an evolution we've seen over the past, decade or two in the markets.
Finally, so you talk about this, and it's great in that sense. But when I've got people like Peter Tuchman, who I'm sure you're familiar with.
I know Peter well.
When Peter Tuchman says, look, those of us of a certain age have never seen anything like this today.
Yeah, the numbers are bigger.
The numbers are bigger. So do you not have a moment of...
We're always most focused on investor confidence and making sure trading is orderly so that investors know that while the markets might not always go up and there'll be down days, they're confident in that they're functioning the way they're supposed to.